Hello everyone, good morning and welcome to the morning report with me, Richard Perry, market analyst at Antec Markets for Thursday the 10th of April. The handover that we've got into the European trading session has certainly been positive, and that's been driven by these set of Fed meeting minutes that got announced last night at 7 o'clock UK time, that suggested that there were that the market had got a little bit ahead of itself in expecting monetary tightening by the Fed, and basically the market took that as a very strong signal. Equities pushed strongly higher in Wall Street, and that has followed into the European trading session, and the dollar was sold off, bonds, US Treasuries were bought, and the markets took it very positively. So the handover that we've had today is certainly a strong one, and the markets, certainly on the equities front, are very much in positive territory on the back of that. It was tempered slightly by the news that Chinese export data fell 6.6% as opposed to a rise expected of 4%, and Asian markets were fairly mixed on the back of that, trying to weigh up the two conflicting bits of news. But certainly the European trading is positive today. The currencies are sort of mixed to slightly dollar positive, you would argue. The euro is slightly stronger, but the pound is slightly weaker, and that is balanced by the fact that you've got Aussie dollar strong, still very strong, and the Kiwi dollar as well, very strong. Both the Antipodean currencies, they're possibly on the path of monetary tightening as well. So Aussies had strong unemployment data out overnight, which has certainly helped their currency higher against the dollar. The key data that we need to watch out for today is well, you've got the Bank of England monetary policy, but to be honest, as is the norm, that is not expected to have any sort of change there. But in the States, you've got also the weekly jobless claims, which come out at 1:30. You'll see that last month we had a push higher in the jobless claims, and the expectation today is for the number to improve slightly to 320,000 from the 326,000, and that would be basically in line with the 4-week average of the jobless claims. So that would be round about where we are on the average. So that would be pretty much market neutral, you'd imagine, if that were to be the case. My chart of the day that I'm going to be looking at, as I said, over the last few days, you've had this dollar weakness playing out in the markets, and one of the currencies that has benefited on the back of that has been the loonie, the Canadian dollar, which has now, on the daily chart, completed this big top pattern against the dollar, which suggests that there's going to be Canadian dollar strength. So a top pattern on USD CAD is certainly strength for the Canadian loonie, and the breakdown below that key support, which was the February low at 109.06, actually now suggests that we could be coming back into this December trading range down here. That would be the implied target area, and certainly that would be back towards this 200-day moving average, 144-day moving average, which is a long-term trend support. The downshift in the last few weeks in the dollar versus the Canadian dollar has been quite marked, and if you look at this on a downtrend basis in the intraday chart, you've still got this nice pull back, pull lower, and it continues to use these moving averages, these falling moving averages on the intraday basis. This is the hourly chart, which suggests that the 89-hour moving average and the 59-hour moving average is a fairly decent basis of resistance there. The momentum indicators are all in bearish configuration, which would suggest that any sort of rallies would be sold into on this chart. And as I'll pull back to this the daily chart. So this the first resistance you need to think about is this neckline breakdown at 109.06. But beyond that, you've also got this 109.50 resistance as well, which was performed support through the top pattern. And also it's pretty much bang on where the around about where that big downtrend comes in as well. So you may get a pull back towards that downtrend as the loonie unwinds slightly, and actually in trading overnight you've had a bit of a pullback as well. So if I just zoom in slightly there, you've had a slight bit of basing out, a bit of correction within that downtrend. 108.53 is the low overnight, and I think anything back towards that 55-hour moving average sort of area, which would also coincide with that resistance at 109.06, which is that key neckline. I think that would be a chance to sell this chart. But I think in the coming days, if there were to be a slight recovery in this chart, I think anywhere between 109 and 110 I think would be the basis of a decent short position, as I think it would suggest that the dollar is now weakening against the Canadian loonie on a medium-term basis, and it should now pull back towards this December trading band between 105.56 and 107.37. So that would be what I think this big top pattern is telling us. You've also, as I mentioned in the morning report, you've also got this death cross, which on the 21-day and 55-day moving averages, which is a bearish near to medium term signal on the moving averages. So I wish you good luck in your trading on the loonie today, and anything else you wish to trade, and I will speak to you later. Thank you.